remember kind of where we were amid the meme stock frenzy. It was an extraordinary story. But what are the aftermaths? Is retail still a bigger player now than it was then?
No, it's a much smaller one. And I think one of the reasons it's a much smaller one has everything to do with GameStop and how it played out for the smaller investor. It wasn't until the news had already broken, it wasn't until GameStop was already up significantly that the typical retail investor opened up a brokerage account, did their first options trade, which was typically a deep out of the money call option on GameStop. If they were lucky enough to be one of the first few, that was a lottery ticket that paid off. If they were unlucky enough to not to be one of the last few, it's been a slow grind down in the stock price of GameStop over the course of the past few years, or sorry, the past few months. And I think what it really is going to do long term is discourage that investor whose first experience was this lottery environment to become a long-term investor in the stock market. And that ultimately is bad for everybody. It means fewer investors in the stock market, less liquidity. It means that they won't use this engine of wealth creation for themselves, perhaps until they've had a re-education.
Perhaps they're not picking individual stocks at quite the same clip as they were. I mean, there's still, I think it's something like 17 million people using Robinhood. There's still an awful lot of assets that they have that they certainly store. And is there an element that people are now putting money to work in funds? They're putting it into work in ETFs. Is the retail investor just perhaps not picking individually anymore?
So Robinhood is an interesting part of this story, the ETF and individual stock story, because for many, many years, people have been putting most of their assets to work into index funds. Tax efficient, easy, don't have to think about it. You get an instant diversified portfolio. And then Robinhood broke the brokerage industry by offering free commissions. And there's a magic to free. Before Robinhood did this, commissions were $10 at some brokers, $5 at another. Not so much that it really makes a big difference to, say, a $10,000 trade, but it makes a huge psychological difference to make something free. That is, there's a certain magic to free. And I think what Robinhood has done is by forcing the other brokers to get to that $0 commission level, they are encouraging investors to trade more individual stocks. Now, all of a sudden, you have to think about it a little bit harder. But because it's free, that inhibition against doing it has gone away. I think more investors are investing in individual stocks. That has a lot to do with the market dynamics that we've seen over the course of the last 2 years, with some of the individual names that were popular with retail investors first experiencing a huge spike in their price and then a very rapid decline, especially over the course of the past 3 months.
Where retail has perhaps forced change is the behavior of certain hedge funds to go short, and to the extent that they go short a certain stock. Do you think that will have long-term impact, Andy?
I think it will, and I think it has in a couple of really meaningful ways. One is it'll permanently change the price of options. The people that were caught short in GameStop and in some of these other stocks. One of the reasons they were caught short is they simply overextended themselves, took too much risk. But one of the reasons that they got caught short is they didn't apply enough protection to the trade. You could have bought an out of the money call option yourself to protect against this kind of eventuality. They didn't feel they need to. And I think that's permanently going to skew the price of out of the money call options, especially on smaller, less liquid, volatile stocks. I think the other way that this changes hedge fund behavior is it's going to make them undereager to run a fully balanced long-short book. They might maintain a long bias, even if they don't necessarily feel bullish about the stock market overall, because it's just so dangerous to be caught short in one of these stocks.